Thanks very much. We're super excited to be opening this conference. Piacere vedervi tutti qua. We have an extremely diverse panel. We have an asset manager, a rating agency, a lawyer, an exchange, and a journalist/editor. So it's going to be an interesting conversation. How about we kick off with some quick introductions? James, maybe let's start from you and go this way.
Yeah. Hi, everyone. Thank you for having me. I'm an analyst at CoinDesk. I'm also a board advisor for a UK public company managing their Bitcoin treasury. I've been in the Bitcoin or crypto space since 2017, and my primary focus is on looking at all these public companies around the world using Bitcoin as a treasury asset.
Bitcoin as a treasury asset is a super hot topic that we're going to be covering later. Okay, next we have...
Hi guys, I'm Dennis. I'm working at the Bitcoin Suisse. They're part of the invest and advice team, so sort of the future asset management division, working there in investment strategy, research, and advisory. Excited to be on the panel. Also believe we're pretty much the crypto native company here on the panel, very early in the crypto valley already, so looking forward to give some insights.
Bitcoin Suisse, for those of you who don't know, is one of the crypto champions in Switzerland, and I believe the first company to set up and push for crypto adoption. So thank you for your continuous effort and paving the way for crypto adoption in Switzerland. All right, how about you?
Hello, everyone. I'm Cristiano Ventricelli, Vice President in Moody's Ratings. I work in a team that oversees all things digital finance. We rate and assess instruments issued on distributed ledgers. We provide market research, and we try to be technologically ready to connect with all the infrastructure that our clients are using. But excited to be here. It's always a pleasure to come to Switzerland.
Would you say, just a quick one, would you say that Moody's is ahead of the curve with regards to other rating agencies for when it comes to crypto?
I couldn't say otherwise, so absolutely, yes.
Good. All right, Andreas?
Good morning, everybody. I'm Andreas. I'm heading the MME Web3 blockchain team. We're a law firm based in Switzerland. We've been shaping or helping to shape the Swiss crypto industry for more than a decade now.
Awesome. Gianluigi?
My name is Gianluigi. Everybody calls me Gigi, so feel free to call me Gigi. I'm the CEO of Binance Italy, which is the subsidiary of the Binance Group in Italy. Binance is the largest exchange in the world for volumes. And I've been there for more than 3 years now. I joined in September 2021, so it's been a while now.
Gigi is a frenemy of mine. So my name is Denitza. I work on the business development team for Europe at Bullish Exchange. For those of you who don't know, Bullish Exchange is a centralized, regulated institutional exchange. We kicked it off around 3.5 years ago, and now we're top 3 globally for spot Bitcoin and ETH volume. In 2023, we acquired CoinDesk with their media and index verticals. And last year, we acquired CC Data, also known as Crypto Compare. So we also have a data business. So you can think of Bullish as a crypto group now. Awesome. So let's kick it off. Regulation versus innovation. Where do we stand? Since we're in Switzerland, I believe we should start with this country. Switzerland was one of the pioneers with FINMA leading the way many, many years ago. It's also home to the Ethereum Foundation, which I believe you, Andreas, worked on. Can you talk about how far we've come and what is there to look out for? And also, do you think that Switzerland remains a regulation champion, or it's probably overshadowed now by the Trump administration and on the MiCA regulation?
Wow, a lot of questions in one.
Yes.
Let me start from the beginning or the end. Okay, do we remain the champion? I think it's a good starting point, and then kind of circle back how things developed over time. If I look at the current global landscape on a regulatory map, I still do believe that Switzerland is among the top jurisdictions for most or many of the projects. Of course, not the only one anymore. And you mentioned the US, which we yet see a lot of activity, but we don't certainly know in which direction it finally will go. When I talk to my US colleagues, they're very progressive. They kind of bullish on how things will develop, but the timeline of that we'll see. If you look at Europe, with MiCA in place since January 25, now this year for 3 months, has kept us also in Switzerland terribly busy. Definitely a milestone in regulations and adaptation for the European market, but it's a European market access regulations. So my personal opinion, but happy to kind of hear your thoughts on that, it does not serve as a global hub for many businesses. I think it's quite formal. It's designed to keep lawyers busy, which I like, of course. But I think from a industry perspective, it's great to have the market access, but it comes along with a lot of burdens. So the global business hub, I probably would tend to still base outside Europe, for example, in Switzerland.
Yeah, we're going to talk about Europe in detail more briefly. Just want to hear from Bitcoin Suisse, because you guys started off in Switzerland, then moved elsewhere, then came back here because you realized this is the best place. Can you talk about your experience, and have you noticed any recent trends reversing and having regulation be seen a bit more hostile, or is it still a very friendly place to do business in?
Sure. I would actually also have started out from that standpoint. I mean, if you look at the very early days of Crypto Valley, then you could even say Switzerland was really the place where the global crypto foundations came to. All the crypto business really came onshore to Switzerland. In the early days, even the Ethereum Foundation, etc., they really came to Switzerland to really be onboarded here, have their token sales, etc., and the foundation incorporated. And I would say nowadays it's really more the trend to offshoring, more globalization in terms of also companies having to go basically where the crypto business is. So in terms of attractiveness, I would say Switzerland still definitely is high up there, but it's also somewhat falling behind to more jurisdictions opening up. So it's more competition. I mean, crypto has no flag. It's quite global and diverse. So in that case, I would say Switzerland also has to ramp it up, because in the early days, there was a lot of bottom-up push for innovation or regulation through innovation. And I would say nowadays that changed a little bit. I would say also the trend came maybe a little bit from the US. We know the past administration over the past 4 years was quite hostile. The European Union, there was not much different. So, and then Switzerland also has to follow suit somewhat always. And that, I think, stifled then also a bit the regulatory approach and openness in Switzerland, I would say, since roughly 2020-ish. But I also believe that it's going to have to catch up in the near term. And I think they also will be now pushed and forced by, for example, the US administration opening up to crypto to really step up the game and promote more open regulation again, to really keep crypto businesses in Switzerland and keep it also attractive for businesses.
Yeah, we're going to talk about the Trump administration and the promise for crypto there, but let's briefly touch, or it's probably not going to be brief, on MiCA. So we're in 2025. We've been holding our breath for this regulation for many years now. It's finally live. Gigi, what do you think? Do you think that it's delivering to the promise, or it's adding more complications? I asked the question because Bullish is regulated in Germany. We have a brokerage, custody, and brokerage and principal trading licenses there. That was very long, very expensive, and very complicated, right? And our starting point, since we service exclusively institutions, was that you get licensed by tier 1 regulator. So you not just get the license, but you're continuously monitored by that regulator. But we're probably going to be paying a very high price. Other exchanges are taking different approaches, right? So what do you think about, how do you think about MiCA? And do you think that we're going to enter in a situation of regulatory arbitrage where players are going to go to less requiring jurisdictions just to get the overall MiCA license? Or will it matter where you get licensed? And also if you can touch on Italy, since you're there.
Well, congrats first of all, because I guess it was not easy to be regulated in Germany, right? Okay, so congrats. Well, let's say that in general, the rules chase technology, right? It doesn't happen, well, very rarely happen the opposite. It's not easy to draft rules that actually can keep the pace with the technology. And I mean, I was, in my previous experience, I was at the Italian government, and I had the privilege to draft a law. And one of the, actually the most difficult part was to draft some rules that were actual for the technology. With the technology, they would, it's hard to predict where the technology can go. So it's hard to draft rules that can actually do that. But I think MiCA is a very good start. At Binance, we welcome MiCA with favor for two reasons, basically. Because first of all, it's an objective reason. Europe is the first example of a group of countries, actually also quite important countries. Some countries of the EU are part of the G8, right? So this helps a company to focus maybe just on one country to get regulated there, and then it can passport the license around all Europe. And this is unique. The US still doesn't have, they do not have this kind of framework. There are other countries in the world, Hong Kong, Singapore, Switzerland, obviously. They are moving fast, and maybe they understood the potentialities of this technology before. But Europe, I think, is doing a good job in this sense, in the sense that it provides clarity, which is important. It gives comfort to players and to those who want to embrace this technology, starting from zero. So this is an objective benefit. This subjective benefit for companies like Binance is that up to before MiCA, the European framework was really fragmented. Italy had its own VASP rules. Spain, France, Sweden, Poland, they were all different. So a company like us, like Binance, had to register in different states in order to provide the services. And think how complex was that? Also in terms of resources. Now it could be easier, let's say this way, because we can focus on 1, 2 countries, depends on the strategy, and then we can passport it.
But then different countries have different translation periods, right?
Mm-hmm, exactly.
So that's where the difficulty comes from. How do you pick? How do you pick a country? And Andreas, I'm also curious to hear from you. Have you seen a shift from your client base? People coming to you saying, now that we have this uniformity in regulation in Europe, we'd like to open headquarters there, or do they do the minimum required in Europe and still keep their operations abroad?
Well, I think I fully agree what Gigi said on the harmonized European market access. I think that's a big benefit. It's a big market, and so having clear rules to access that with one license, being able to provide services into the whole of Europe is a great benefit. What we have seen from our client base, which comes or intends to come to Switzerland, to Europe, or build up a global business, that they, of course, if they want to provide a Web3 banking, financial service style of activity, exchange, custody, whatever that is, which falls on a MiCA, that they need to have a MiCA hub. What I don't see that they generally intend to kind of build, as I said before, the global hub for the global business out of Europe. So normally they tend to have a structure where you would have like a holding company, an operational company for the global business somewhere, that may be Switzerland, maybe somewhere else, and then you would have a licensed entity for the European market. Now that may be Italy, that may be Liechtenstein. Time will show who has the most benefit. Quite often it helps to have a proximity to the kind of the global entity to be able to share certain human resources. But I think that's the path I see. And then I think that goes a bit beyond the financial service business. For all the companies in the Web3 industry who still issue token, there for that part you can easily and probably easier do that outside of Europe and just then comply with the European regulations from abroad. And maybe the last thing I want to mention, that while MiCA is quite comprehensive, there's still substantial loopholes in it, not in terms of clarity between, I think there's still a lot of clarity to be gained by the regulators and their practice in the coming futures and years, so the big topics will only arising now, but also in terms of services. So for example, one of the key services with many of our clients who are in this Web3 banking industry provide and do a lot of kind of business with it is staking. So staking as a service, and staking is not covered by MiCA, so you still have this issue that you need to jump from one jurisdiction to the other to make sure you comply with the regulations within Europe.
Yeah, I mean, I guess we need to wait until year end and evaluate, right? But because it's an extremely ambitious regulation, and I think what's very interesting is that for once Europe was leading the way we got our act together before the US, and that's a huge achievement. But we'll see whether that was a good or bad thing. Moving over to the US, to Cristiano and James. So, huge promises by the Trump administration. We've seen crazy price action at the beginning of the year. Now things seem to have toned down a little bit. Can one of you, maybe we start with Cristiano, talk about what's been promised, what's been done so far, what can realistically be done so far, and the impact that we expect this to have on the overall market? So maybe first part of the question to Cristiano, and then the second part to James.
Sure, thank you. We can categorize what is happening in US along two features. One is assets and the other one is infrastructure. Let's start from assets. There are two main asset classes that have been impacted by the new administration. The first one is stable coins, and we have seen huge progress on that because actually, I mean, US said we don't want retail CBDCs. And I mean, they didn't explicitly say that, but probably the message is that stable coins are supposed to cover what retail CBDC will probably cover in other countries. And actually yesterday, Wyoming announced that they will issue a stable coin. And the important thing is that they are not issuing a stable coin on a permission closed network. We are issuing on 6 public blockchains. So that's the other element that I was mentioning before, infrastructure. What this administration is trying to do is to make it easier for companies to interact with first assets that were previously untouchable or almost, and the one is stablecoins, and the second one is cryptocurrencies in general. No, I'm not referring to meme coins. I'm referring to the likes of Bitcoin and Ethereum. And that's where the whole discussion around strategic stockpile comes into play. That is much more nebulous for the time being, but it's not really relevant at this point what the states and the US are doing. Let's look at the private sector, and let's look at what corporates are doing. I mean, Bitcoin is already playing a huge role in a lot of corporate treasuries, and I'm not naming any names, but you all read the news, and you all see that many corporates in the US are actively pursuing strategies where Bitcoin becomes a core part of their treasuries. And this, of course, could have implications and risks across the board. So we talk about stablecoins, we talk about cryptocurrencies, let's talk about infrastructure. On the infrastructure side, US is trying to make it easier for companies to interact with permissionless networks that were previously untouchable by banks and other regulated institutions. We have seen first the SAB 121 amendment, and now crypto custody is much easier for companies. And the second one is the OCC issued a letter reversing previous guidelines, and now for banks and other institutions, it could become a little easier to interact with permissionless blockchain to run nodes and things like that. So these are the two elements we are seeing. Again, it's early days, and it's not like we will see anything materially approved in a matter of months. It will take a lot of time. Even the stablecoin bill, which many people think it's the lowest hanging fruit, still need bipartisan approval, and it will be a long process. But that's the direction of travel, I would say.
Thank you. Yeah, the world needs more stable coins. We don't have enough of them right now. James, what about the fact that in the US we have a regulation leading the price action? As I mentioned before, we had crazy price action at the beginning of the year. It looks like the market's taking a breather now. What are you seeing as key catalysts going forward? And, you know, not investment opinion, but can you comment on the Bitcoin price?
Yeah, so the 30% correction we just had recently, looking at previous bull market drawdowns, is very similar to previous bull markets. So a 30% correction is quite normal. Actually, if you look at 2017, it was quite an immature asset class back then, but we had 50-60% drawdowns. So this was quite normal. And then if you remember in January 2024, when the US ETF launched, Bitcoin actually had a 20% correction just after the launch. And again, we just had a 30% correction. So it was very similar. It was kind of a sell the news. The US announced a strategic reserve that they would purchase in a delta neutral way. So yeah, there was a bit of synergy there as well. But in terms of the price action from a corporate treasury perspective, especially strategy, and then it's kind of tying in with UK regulation. As a UK retailer, I don't have access to any Bitcoin ETFs, be it in Europe or the US. So the FCA have effectively banned it. So if you look at UK brokerage accounts, strategy was one of the most traded, most purchased stock for a number of years. It's actually now gone down. I checked last night to about 15, which makes sense, which has coincided with the drawdown. But with that retail access, that's developed a premium to strategy, which has allowed him to essentially, for many reasons, the stock's trading at a premium, but that's one of them, and that's allowed him to do different capital raises, such as ATM share sales. But his stock has been the best performing stock on out of any S&P 500 company since he launched the strategy in August 2020. So now we're seeing a lot of copycats as well. Metaplanet in Japan was the best performing stock in 2024. And there's definitely a first mover advantage. So again, with my company in the UK, Coincilium, we've seen huge share price appreciation as well. And it's a way of trapped capital that can't access spot Bitcoin. So I think what Saylor's found that he can access capital markets through preferred stock or convertible debt, where pension funds, insurance companies aren't mandated or aren't allowed to buy spot Bitcoin, or maybe not even the ETFs. So he's trying to find as much trapped capital as possible to purchase stock, and this is one of the reasons why we're seeing huge share price appreciation.
Yeah, let's talk about Bitcoin as a strategic reserve asset. I want to hear from the guys based in Switzerland. There's increased talk about about a referendum, where the idea is to add Bitcoin next to gold in terms of a strategic reserve. Can one of you explain what's going on, and is this realistically going to happen? I mean, it's Switzerland, so we'd expect anything.
Maybe let me first talk from an industry standpoint, then I give it to the law guys in terms of feasibility. So basically what this is about is really changing the charter of the Central Bank of Switzerland, so the Swiss National Bank, which currently reads having the option to invest into gold in terms of reserve assets, to basically add gold and Bitcoin into that charter. So it would, of course, give the option to now also allocate part of the treasury to the reserves, basically, in terms of Bitcoin. By the way, actually, the Swiss National Bank has indirect Bitcoin exposure already. As James mentioned, MicroStrategy, it's on the Swiss reserves in terms of the central bank. So there is some exposure. Actually, also our chairman, Lucius, is always talking to the Swiss National Bank. There's a lot of videos and clips of him talking to the bankers, basically trying to sell the idea of also allocating to Bitcoin. I would say it's going so and so. There is some progress, but it will still be some time before that will be possible, and the charter might be changed. But I think also out of the European countries, if one country shall really change that charter for the reserves of the central bank, then Switzerland has a quite decent chance. But happy to hear Andreas in terms of feasibility. What's his thought?
Well, thanks a lot. Dennis, I think there's very little to add. We don't know what's going to be happening. In principle, it's about, as you mentioned, getting the possibility to add Bitcoin to the reserve. Whether or not this will happen, we'll see. Certainly will be a strong signal on the market and put Switzerland on the map for a certain time. But we'll just need to wait and see. And yes, it's definitely a hard project of Lucius. He's been working hard on that.
Yeah, these are super exciting developments. Let's take a step back and talk about the role of banks in crypto adoption. I know that's an area that Binance has been really active in. You're launching a whole bunch of new products for banks specifically. Why is this important? Why are banks important for crypto adoption, and how are you guys catering to that?
Well, first of all, let me say that in 2024, we saw an increase of new registrations by institutional players, corporations, not only banks, by 97% compared to 2023. So it's clear that there's much more interest than before. Why? Well, the reason why they come probably is because they understood now the potentialities of this new technology. It's not just trading. Okay, trading it's a part, but let's remember that behind there's the blockchain technology, which is really disruptive, right? So maybe they understood. I'm quite sure actually they understood the potentialities of this technology for several reasons. I mean, you can talk about tokenization, you can talk about payments, and going on. So this is now clearer than before how useful this technology is, and that it is here to stay. It's not going, it's here to stay, we are sure. We all know that, come on. But now they know it too. Some time ago, it was hard to find a bank that actually was, advertising that they had internal departments dedicated to technology, to blockchain technology, sorry. But they actually did. I know several banks and several institutional players that have been analyzing and studying this technology internally for a while now. The point is that nobody wanted really to say this in public. Now that many investment banks in the world they made the first step, it's easy also for the rest to follow. And some time ago you didn't want to be the first, but for sure you don't want to be the last, because if you're the last, you're gone. You need to close the business, right? So they have understood this. At Binance, for example, we have developed a couple of interesting products and services for institutional clients. One is the Wealth Pro. The other one is three-party agreement. Maybe, I don't know, if you have time, we can chat later about this. And we want to act as a bridge between this technology and the institutional players. We know this evolution, I don't want to call it a revolution, it's an evolution of the traditional financial system. This time came from the retails. The retails first understood the technology and they started to buy and sell cryptocurrencies. And now it's scaling up to the institutions. In the past, generally, the traditional ways, it works the opposite. Now, I come from people that are very knowledgeable about finance, and then it goes down to the retail. So it's interesting to see what's happening. And this so-called bull market, this new phase of the market, we see it's driven by institutional players compared to the past one. The past one it was dominated by retails. In this one, institutional players are actually having an important part here.
Yeah, it would be great to see if institutions are able to adopt the incredible innovation that's coming out of the retail space and not just crash it and force their way. But I guess we'll wait and see. I think we can all agree that crypto is now seen as an additional asset class to the traditional asset classes. Can we talk about the intersection between crypto and TradFi, and maybe just go this way and see the latest developments that we're seeing? Just have an open discussion.
Yeah, from a 60-40 portfolio, I think the rule book's kind of changed. You've got bond yields globally blowing out, currencies inflating. About the M2 money supply is growing about 13%, so you've got huge currency inflation, embedded inflation. So gold's now gone through, I think, $3,000 an ounce. So there's talks now of that 60-40 portfolio being ripped up, and where these alternative assets should actually have an allocation now. So where you're thinking 1%, I think 3% is being discussed for Bitcoin to be part of the portfolio now. And then you just think of that on a global scale, it becomes such a huge number.
Thank you. Maybe we can also hear from Bitcoin Suisse. What are your clients looking for?
More Bitcoin, that's for sure. But on a serious note, I think also adding to what James said, just being here in 2025 now, and no one's really blinking anymore when you say or talk about, shall we have Bitcoin in a strategic reserve, or shall maybe a bank or a nation state reserve, shall they maybe allocate 1, 2, 3% into Bitcoin? That was basically the dream or the end goal we had always in pre-2020 eras, basically. So just that you can talk on that level already about crypto, I would say, is already a huge attestation, basically, that the asset class has matured significantly. So I'd say the demand is ever increasing, and also what Gigi said earlier, right? It's basically the age of banks now, or institutions. One could almost say we're entering now even the age of sovereigns, nation states. So the topic is becoming even bigger, even faster, one could say.
Yeah, I mean, the fact that we have Moody's here at a crypto conference says it all. So Cristiano, tell us.
No, I just want to add, we always think about crypto mainly as a spot asset class, but in my opinion, it's interesting to see what is happening around spot instruments. There is a whole world of derivatives, and I'm not referring to ETFs only, but I'm referring to options, perpetuals, and other instruments that is yet to flourish, and it will probably do in the next few years. And traditional financial institutions are leading the charge in that respect. Recently, a Binance competitor announced, no, they haven't announced, but they are, in advanced talks to acquire a strategic player in the crypto derivative space, and that says it all. So my point is, the asset class at the spot level is super interesting. We all know about that, but we should look for the development of a derivative market, which is, I mean, if you look at traditional asset classes, this is what operates under the hood, and it's sometimes mostly overlooked, but it's an essential element to well-functioning markets, and it will improve liquidity and depth of the market as a whole.
Andreas, thoughts?
Yeah, maybe to add on that, from one of our key roles is always to help building new infrastructures for digital assets, and so we have a bit of an insight who's building what and who's investing in what type of infrastructure, and we've seen a lot of activity obviously over the past 5-6 years in building banking grade infrastructures to custody, staking, trading, and now we have a situation where, if I counted correctly, I'm not entirely sure, I think 14 Swiss banks are now providing digital asset services. We have 2 with SDX and BX Digital now since 2 weeks to license DLT security trading venues. But I think if you look a bit in the future and how much is being invested in integrating DeFi technology and DeFi setups in a banking grade setup, and make that compliant for banks to be used and financial service providers to be used, I see quite a promising future.
Binance, the crypto giant, how are you thinking about the interconnection between crypto and the traditional markets? Are we going to see Binance offering stocks on their platform, on your platform anytime soon?
I really don't know. As of now, there is obviously an intersection, and the fact that there are now, in Europe and in other countries in the world, rules that clarify how to work in this sector for institutional players is very important, because we know these are supervised entities and they know compliance very well. So for them, it's hard to take a risk if it is not, well planned, and clear rules help them and also us to make more informed and risk-based decisions. So the fact that there are rules now, they give this player more comfort. So there will be, I'm sure about this, there will be more and more an intersection. We see that some uses of this technology are very useful for them too. I was mentioning before payments, cross-border transfer of value. I mean, it's obvious that there's business for them too. So there is an intersection. That's obvious.
Thanks. And just one final question, which I'm actually really interested in because we're running out of time. Just very quickly, what is the most exciting thing you're seeing in the crypto industry right now, or a project you're working on? We have literally 3 seconds per person. James, let's start with you.
Yeah, it's just to see how the Bitcoin treasury adoption's going. Last night, GameStop announced a 1.3 billion 0% coupon on their convertible notes, even though they have $4 billion cash on hand. So the appetite for purchasing Bitcoin now is huge.
Cool. Denis?
Gonna agree on that one for sure in terms of that part. What maybe to add in a different topic would definitely be tokenization, real-world assets. So we know, of course, a large share of the world currently is already banked, but I think roughly 80% of the world is still unbrokered. So tokenization and efficiency gains and also access to capital markets, that's definitely a huge thing coming up in the next cycles also for crypto.
Thank you. Cristiano?
I know that's for you, it's the most boring asset class ever, but for us, it's stable coins.
Okay. Andreas?
Many great topics, but integrating AMMs in institutional grade setups, I think very...
Automated market makers.
Yes,
Yeah, that's
very
what we do.
interesting.
We can talk about it. Gigi?
Regulatory developments, obviously, and I mean, products and services for institutional, as we said earlier, and see the adoption that is growing, especially also in so-called third world countries. It's impressive.
Because there's
the
a real use case for crypto there, I guess.
Yeah, oh yeah, for sure.
Awesome. Thank you guys so much. We've covered so much ground. I feel like we sprinted through these. If there's any questions, please grab the speakers afterwards and ask them all your questions. Thank you.
Thank you.
Thank you.